And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals and market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that. Builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends, family, and fellow futures traders. Welcome to the market forecast for Thursday, April the 28th. As always, we are going to be seeking accurate context, thinking about risk management first, and always remaining patient. Hopefully, if you're in the markets this morning, things are going your way already. We've had some pretty big, important economic data come out already this morning. 7:30, the GDP preliminary came out. Last quarter, quarter four of last year, was 6.9%. They were expecting a positive 1.4%. Today came out negative 1.4%. I think they were looking for a positive 1.1% today. Came out negative 1.4%. Contraction. A little bit of a shocker there. Markets are actually holding up pretty well. We also had jobless claims this morning. They were looking for 180,000. They got 180,000. Continuing, they were looking for 1.4 million. 1,403,000 came out 1,408,000. I know what I got going on here. Echo. Sorry about that. We should be better now. We're talking, maybe you didn't understand or couldn't understand. GDP came out, they were looking for 6.9, well, last quarter four last year, 6.9%. They were looking for 1.1% this morning, came out negative 1.4%. Bit of a shocker, a bit of a contraction. Markets actually holding up pretty well. Jobless claims this morning, last week there was 184,000 initial jobless claims. They were looking for 180,000 new jobless claims, initial jobless claims. That's what they got today, so they were pretty accurate on their estimate this morning. Sorry about that, folks. And thank you to my brother Rick. He sent me a quick text message and let me know that was going on. I apologize. Continuing jobless claims, last week there was 1,417,000. They were looking for 1,403,000. A little higher than that, 1,408,000. Still waiting for the nat gas numbers to come out. And as far as other things we're focusing on as traders this morning, U.S. stocks were set to open higher. Looks like they're still set to open higher. Facebook's earnings provided a lift yesterday after the close, but we've got another busy day of earnings today. We have already out this morning, and all of them beating expectations, was Eli Lilly, Merck, McDonald's, and Caterpillar, just to name a couple. Very busy day in earnings today. We'll be waiting for Apple and Amazon after the close today. Crude prices remain range-bound, while natural gas prices have firmed up in the face of Russian embargo. Italy is caving and decided they're going to pay Russia in rubles, along with a few other European buyers. So that's kind of against NATO's rules, but we have to see how these things are going to play out. You know, as we all are well aware, the conflict in Ukraine continues to go on. Please remember to pray for peace. As always, remember to like, share, comment, question, feedback, and heckling and love are always welcome here on the forecast. Subscribe to our YouTube channel. You can get notified when we do go live. This morning, the VIX is down about 6%, and at 29.73, back down below 30, at least to start this morning. Dollar index, another 52-week high, 103.81, up almost 1% this morning. And the 10-year yield after the the GDP came out, really kind of snapping right back to settlement, very even on the day last time I checked. As always, I got to say good morning to everyone. Tachyon wins the prize this morning, first in the room. Rick, love you. Thanks for letting me know. I just got noticed Mom's watching, so everybody hide the beer. Shaw, good to see you this morning. Brian, Dan, Tachyon, overnight price action, didn't like it, didn't do anything. Well, now you're going to be available and looking for opportunities during the day session. Hopefully you have a good day, Tachyon. Hopefully we all have a good day. Chilling with Dylan, Theo, Swan, Dead Letter Opener, Frederico, Spencer, good morning. Tom, my other brother, love you too. Force Driven, Jordy, J Trades, Jocklo, good morning. Charles, Terry King, Scott Saw, and he conquered. James, Bill, Sarah Hall, fine dawn, prayers and love to you as well. Alfred, Shaw, sing it, Hoax, sing it. Sorry about that again. Frederico, Dead Letter Opener, Harry, good to see you, Harry. Haven't seen you in a while. Brody, Trading Research. Mason, good morning to you. Andre, everybody's saying echo. Three Lions Insight, good morning. Double microphone. Sorry about that. The letter opener was doing mushrooms. It's what it seems like probably when it sounds like that echoed. James P, good morning. James Swan, bizarre, Tom says. Again, I apologize. You remember things better when you hear them twice, Spencer says. Jason, good morning, everybody. Thanks for letting me know again. UG, Dead Letter Opener on mushrooms again. Hello. Jeff, sorry about that again. Now we're good. We're all awake now. All right, good. Yesterday it was Ted Nugent. Today it's a double mic. JD, good to see you this morning. UG, good to see you. Dan, good morning. Joe, good morning. Rusty Golfer. Well, maybe we'll save the mushrooms for Fridays. Albert, they should pay Russia in marbles. That's a good idea, Rick. ZK, yeah, Mom's here. So thank you, Sarah, for saying hi to Mom. That's very nice of you to say, Brody. I hope she's reading that. Brian, flashbacks for real. Columbus, Isaac, I trade better on mushrooms. Eddie, all right, good morning. Today is Make Hogue Money. Here is the link to register if you are not already registered. I've got a little bit of announcement of a change we're going to Make Hogue Money next week. I'll talk about that during Make Hogue Money today. Still going to be looking for a couple of people to discuss their ideas, their trades. You're going to be able to show your charts where you're going to be able to talk. We're going to vote. We're going to have hopefully another positive session. Tuesday we took a trade and we made, I don't know, $400 or $500 on Tuesday. So, hey, I'll take that. That's a good thing. Also, thanks to all of you who joined Top Step Trading Hour yesterday. I thought hopefully it was a good session for you to listen to some folks and think about trading and learn a little bit more, as always. So at about 8:20, we're going to get into the Zoom room for Make Hogue Money, and you guys are going to make those choices and vote, and hopefully we'll have another positive day. I think we're up about 1,500 in the account now. That's, I think, in an account high. Let's see how we end up today. All right. Now, let's check out what's going on in our markets. I gotta get the mic straight here. Echo. All right. Here's the S&P daily. We had cat scratch fever yesterday, and we did scratch our way off of the cliff. We've seen some pretty good rejection below weekly kickoff low. We have yet to close below there. Yesterday's settlement 41.80 and a quarter. The day before 41.70 and a half. So we are seeing some rejection there. We lost open interest on a little bit higher volume yesterday. So it does seem like we covered some shorts. Maybe we were a little bit too short to continue to break yesterday. Volume really just kind of maintaining. But again, we lost approximately 5,600 in open interest, pulling ourselves away from the abyss yesterday. Take a look at the 30-minute chart. So we were looking at this trend line. We looked above it yesterday. When we couldn't accept below it, above it, we pushed all the way back down to weekly kickoff low. We're holding above it now. It is starting to appear as though we may be creating a bit of a bear flag. We've got higher highs, higher lows. Volume was okay, lower open interest. The market just kind of seems to be wandering a little bit. My question was this morning, are we going to see an opportunity at this trend line up here? Are we going to see an opportunity at this lower trend line? There's a little bit of overnight inventory to the long side. It appears as though that overnight inventory is reconciling as we speak. So the major part of our information as far as economic information this week is out. Now it's mostly going to be depending on earnings for today and tomorrow. There's probably not going to be a lot of long earnings after the close. We'll have to see what we've got tomorrow morning as far as early earnings. So overnight, we found support at this trend line. We looked above it yesterday. We couldn't hold above it. We rejected back down to weekly kickoff low after the close with Facebook. We came back up above it. We've been holding this trend line ever since. It's kind of far away now. It looks like we're not going to be opening with a gap. It looks like our overnight inventory is already being reconciled. We open inside range and value. I'm going to really try and stay patient. Why? Well, the perception of value of the S&P hasn't changed that much. And I'm likely to find better trade locations as the day goes on. We see yesterday we opened below value. We traded into value from the previous day. Some of our better trade location came in the first hour and in the first hour and a half of the day yesterday. So staying patient, letting the market establish an early range when we open inside of value can be helpful. There's nothing that always works or doesn't always work. So my kind of idea is if we open in range and in value, stay patient, look for opportunities as the day goes on. If we don't open with a gap, that is. If we turn around and open with a gap, that changes things a little bit. If we can't close the gap, we look for opportunities in the direction of the gap. Gap rules are if we open with a gap and can't close the gap relatively early, we look for opportunities in the direction of the gap. Doesn't look like that's in the cards, at least right now. We've got about a half an hour before the open. We're going to watch the open in Make Hogue Money. We'll see what kind of opportunities we can come up with. Looking forward to that today. Hopefully you're all going to join me. Okay. Earnings sensitivity, economic number sensitivity, geopolitics, headline risk sensitive. Anything can happen. ACH, that's our acronym here at the Market Forecast. Anything can happen. Trade what you see, be patient, let the market come to you. Every time I go looking for trades, I find bad trades. When I find good trades, they seem to find me. Take a look at the crude oil now. We'll see if there's anything going on the open. But the way this market is shaping up, we are in range, we are in value. If we were to take a volume profile from the beginning of this coiling activity, it would probably look pretty even. And I think that we're getting very close to bringing some sort of change to this market. Lower volume yesterday, well, that makes sense. We're right in the middle of the range, but we added 21,000 estimated open interest. That estimated open interest, that increase in open interest is beginning to lead me to think that a change is near. We've got bets coming in. We've got more energy coming in. Volume is slow, and the market's job is to facilitate trade. How good of a job is the market doing that? I would say with the drop in value yesterday, we're getting closer to this market seeking new levels to facilitate trade. So I'm going to be watching the extremes. Basically, a weekly kickoff high and weekly kickoff low are going to be vital, important levels for us, and they're quite a ways away. There could be some really good opportunity between where we are now and either side of that. What does it look like on the 30-minute chart? Well, overnight inventory, flat. In range, yes. Gap, no. In value, no. Inside the range, though, I'm going to, again, try and stay patient because we know the situation that this market is in. It is range bound. It is in an energy building mode here. And while we're sitting here in the middle, here's weekly kickoff high, here's weekly kickoff low. Our tennis players still in the middle looking to volley on either side of the court. Be patient. Be patient. I will be stalking this market to see opportunities if we approach weekly kickoff high, if we approach weekly kickoff low. It's going to be, I think, kind of a random walk. You can see that this market has been respecting short time frame levels. Just in the last, I don't know, week or so, we opened with a gap. We respected the gap. We opened here. We traded to the high of the range from the previous day. We found support. Where did we end up finding resistance? On the gap close at the high of this range here. Yesterday, we traded to value low. We didn't quite get to value high, so value low was an important area for us to be looking at. And these are all short time frame levels that sometimes will be respected because we are in short time frame control, and we are still in it. Overnight high and overnight low look like there may be some fish there. We've got value low from yesterday, value low from the previous day. We've got last week's low here. I believe that's last week's low. And it's been supportive or resistant. I'm going to again try and stay patient. My bigger opportunities in crude oil are at these bigger extremes. Anything in the middle, I'm going to be really just trying to find short time frame levels to lean on to help me limit risk. It's a bit of a random walk here. Again, I'm stalking the extremes in crude oil. Do we want to take a look and see if the opening range is doing anything for us? I'm going to go with probably not. No. And it's disappeared on me. I don't know why it does that. So here's the opening range. Uh, 0162 to 0183, 21 ticks. We've taken out the high of it, but I'm not going to be doing anything here because we're in range, near value, not finding that there's any real urgency to get into a trade early this morning. Good morning, Ray. Whiskey Tango Foxtrot or ACH, either of them work, Rick. ZK, if you can explain a little bit why the people in the webinar were partial to ES over NQ. Well, the ES is a much thicker market. It's much more liquid. And I can tell you from where I sit, the Nasdaq is so thin and whippy, it gives me heart palpitations. I think that because the S&P is a much thicker market. I mean, there's over 2 million in open interest, where the Nasdaq has a couple 100,000 in open interest. The S&P's is 10 times thicker. than the Nasdaq. It moves a little slower, a little bit more deliberate, if you ask me. The Nasdaq again gives me heart palpitations, and I'm pretty sure that the others in the meeting were kind of feeling the same way. All right, here's the Nasdaq. Lower lows. Again, we pulled ourselves away from the abyss. We lost open interest again, so it's again looking like maybe we were a little bit too short in short time frame to really continue to push this market lower. And the other longer time frame, bigger money, didn't push. They did not enter the market to the downside. Agreed. The contraction in the GDP today is a bit of a shocker, and that's the beginning of a potential recession. We get a couple of more quarters of contraction, and we're in a recession. So there's a lot to digest. Okay, Nasdaq. Tech earnings have been positive. They were positive yesterday. That's helped push us away from the abyss. Open interest indicating maybe we were a little too short in short time frame. We're back above weekly kickoff low here. Take a look at the 30. We're day traders. We're just getting an idea of what the picture looks in the longer time frame. Again, are we setting up a bear flag here? I'll be watching this lower trend line to see if there's acceptance down below it, to see if maybe we get another push to the downside. As far as this morning, settlement all the way down here. Facebook came out and popped. We got a nice push to the upside, but that doesn't change settlement down here. 13,009 is settlement. Overnight inventory is perhaps a little bit to the long side, but again, a lot of that's been reconciled. No gap, no runs, no hits, no errors, nobody left. Patience. We're in the middle of this channel. We started to put in higher lows, higher lows, higher highs in short time frame. This could end up being a bear flag. We had lower volume, we had lower open interest on this push to the upside. If we end up with a small range today, ranges getting smaller in a bear flag is usually a good sign that a bear flag is forming. Again, earnings, eco-sensitive, geopolitical, headline risks, all of those things, we have to maintain good risk management. Look for areas that the market isn't far from a point of invalidation or a valid stop level before getting in. I look at trades from the risk side. If I'm going to be buying down here, if I'm going to be buying against this trend line, I want to know where the risk is. And once I know where the risk is, I can find good trade location based off that risk level. Again, no gap, no runs, no hits, none of that. Try and stay patient. Let the market establish a range early and see if you can find good trade locations based on that. Opening range trades are unlikely to succeed. They've been terrible yesterday. I think we did have one or two yesterday. And now that I've said that, the market likes to make a liar out of me. If I could only trade one market and one trade setup, well, a market would probably be the S&Ps. Trade setups are really based on context and market-generated information. All right. So stay patient. Anything that's opening in range, especially in value, try and stay patient. Gold. All right. We have a couple of swing lows. We tested two on Monday and then again yesterday. The next swing low that I see down here is 1849. This market has been targeting weak structure that's been left in the past. We're going to see some more naked points of control lower here. We added 3,800 in open interest yesterday on a little bit lower volume, but that open interest is, that's sellers. That's new shorts coming into the market. We know the market traded lower, closed lower. An increase in open interest indicates that more aggressive sellers accumulated shorts. Now we're overlapping to lower this morning. Are we getting too short? I mean, we've been 1, 2, 3, 4. We've come a long way in a short period of time. Take a look at the 30. A little bit of a knee jerk when GDP came out, but where are we? We've opened in range. We've opened in value. GDP came out, put in a new high for the session, regular trading hour session high. Our regular trading hour session low is down here, and this is what I'm talking about. There's some unfinished, unchecked points of control lower. The market's been kind of driving to check those levels out. Checked this one out last night. Now we're back in range and back in value. So I'm going to let the regular trading hour session range extremes give me some opportunities because, again, I can limit risk. Our overnight high and overnight low also. I'd like to see the market come down here and retest this naked point of control that it did in the overnight in the regular trading hour session. Again, stay patient. We've been waiting for Thursday. We've been waiting for GDP. There's going to be some period of digestion where traders start to think about what this all means. Is this going to change the pace of rate hikes? Is this going to change anything at all? Who knows? Anything can happen. Euro. So we've been one-time framing lower in the euro. Yesterday, we talked about how important it was not to fight a market that is directional, and this market is directional. we put up 3 straight consecutive gaps. Volume and open interest continue to increase on the downside, adding another 2,700 estimated open interest yesterday. Cannot fight markets like this. It is one-time framing lower. Again, we have 3 straight gaps. This is an emotional downside move as the dollar continues to push higher. The euro continues to push lower. Here is 1 gap, 2 gaps, 3 gaps. Today, we close the gap. Our opening range is the dead low of the session. We've got swing lows. This swing low right here is from March of 2017, 104.98. Look what our low is. Okay, we opened, we drove back to it, we drove back above it, we closed the gap. This is a support level. I'm going to be looking for fish down here today if I get another opportunity down here. The regular trading hour range, overnight range, the lowest we've traded in a long time, 5 years, is down here. This looks like an area where I would be interested in finding fish. And again, the opening range is the low of the session. That opening range low is 104.90 and a half. The dead low. So I'm going to be looking for fish here. I've been kind of wondering when we're going to have some sort of short covering rally. And coming into Thursday, coming into Friday, I think the probabilities are increasing. So it's given us a little bit of structure down here to lean on. I haven't seen much structure to lean on this move to the downside. 10-year. Yields uptick coming into FOMC on Wednesday. This coming Wednesday, the FOMC release is due out. We've had rates kind of falling off. We got an uptick in it yesterday. Volume was a little bit lower. We did add 9,200 in open interest to the downside yesterday. I think sellers have been looking for opportunities to sell strength in this market. We've got a little bit of a bear flag here. Are we breaking out below that bear flag? Take a look at the 30-minute chart. Broke out and closed below it yesterday. Doesn't surprise me that we're seeing some continuation to the downside. Technically, we did see an uptick in rates overnight. They're pretty steady last time I checked, but technically this bear flag could provide a pretty decent downside opportunity, though it's going to be hard to find a way in at this time. natural gas. Okay. Geopolitical fundamental fears. We had some pretty decent volume. Expiration has passed. Higher volume, higher open interest. 19,000 contracts in open interest added just yesterday. We're getting some bets to the upside here, ladies and gentlemen. Now we can't doesn't discount the fact that we've got a bearish engulfing pattern here. We have an island top on this day here on the 18th. Just some conflicting fundamental information. We're seeing the market coming off a little bit here. We've got an inside extended trading hour range. Here's the 30-minute chart. We've got an inside regular trading hour range. Starting to get a little bit short in overnight inventory, just opening, looking like the opening range is the high of this session, leaving value. We get a little bit too long here on this push to the upside, maybe. We've got some naked points of control to come check down here. We've got one up higher. One naked point of control. Difficult to know what to do, especially when things get more and more complicated with the fundamental and eco and political situations going on. All right. Ladies and gentlemen, your Chicago White Sox. But I have a little fun with that. All right, it's 8:16. I'm try and be in the Zoom room for Monday at 8:20 so we can get started. And again, I got an announcement change to Make Hope Money next week. Let me know what you think. Take your deep breath. Stay humble, grateful, creative today. Get your good trade ideas ready for Make Hope Money, and I will see you in just a couple of minutes. Trade well today. If I don't see you in Make Hope Money, there is no recap today. We're going to be having a podcast at the end of the day today. So if I don't see you in Make Hope Money, tomorrow morning on the forecast. Trade well today. Risk management. Let the trades come to you. Oh. Make sure you pray for peace.